Hello, this is Ken Simpson with the stock watch list presentation for the week of January 6, 2019. Happy New Year. The following presentation is for educational purposes only. Nothing you'll see is a recommendation to buy or sell any security or to participate in any particular trading or investment strategy. Trading involves risk of substantial loss, and you assume all of that risk. I am not your investment advisor. If you want someone to blame for your investment losses, hire an investment advisor. Okay, you can follow me on Twitter at Crystal Bull. The charts you're about to see were created using MarketSmith, which is a registered trademark of MarketSmith Inc. They've been enhanced with a custom Chrome browser extension that I wrote. You're going to see extra colors and features that are not available in MarketSmith. Please don't ask for a copy of the extension. MarketSmith will not give me permission to distribute it. And without their permission, I won't distribute it. Okay, so let's get started. It has been a rough time. I hope that you haven't taken too bad of a beating here. I haven't done one of these presentations for a while as the market's been just crashing, and it's been quite painful. I've lost a lot of money, as most people have. A lot of hedge funds have gone out of business over this. Of course, they don't show up in the statistics as we have a survivorship bias in the hedge fund reporting, but a whole bunch of people lost a whole bunch of money. I blame this primarily on President Trump's tariff plan. Of course, there's a rising interest rate environment and a long in the tooth bull market, but the tariffs have been terrible. I took a lot of heat over this when I pointed this out in January, that the tariff plan was a dumb idea. And he has been leading us into a global growth slowdown, if not a recession. And that's not good in a rising interest rate environment. Somehow he thinks that the countries are paying his tariffs. I have no idea where he gets that idea. The countries don't pay the tariffs. The end user does. Tariffs are just speed bumps in the road of trade, and they are not good. And I hope if you're one of those people that gave me a bunch of grief over my criticism of Trump's plan back in January, February, I hope you haven't taken too much of a beating as you've stuck to your guns here. But anyway, still a dumb plan. We had the market make a nice rise on Friday, and part of that was due to the news that Trump and China are going to get together and try to iron things out. So if they can get past these ridiculous tariffs, we may see a resumption of the bull market, which would be a good thing. Right now, we've gone into bear market territory. Markets are down primarily across the board, down more than 20%, which is where most people draw the line at bear market correction. Okay, so anyway, we'll start here as we like with the NASDAQ 100 index. Going back for months and months, you can see that the double arrows here are correction. The single arrows, this is what IBD has been telling us. Single arrows are uptrend under pressure. Double arrows are correction. The green arrows are uptrend resume. And you can see that IBD's market pulse has been terrible through all of this. You know, they're calling a correction here at the bottom. That's not telling you that they're calling the bottom of the correction. That's telling if you're participating in their ETF strategy to sell everything here, to sell everything here. They're telling you to buy it all back right here, to buy it all back right here. Okay, sell it here, buy it here, sell it here, buy it here, sell it here. Anyway, for the most part, it's been terrible. I've said from the beginning when they came out with that strategy, it was bound to fail, and it pretty much has. But here we are. IBD just put the uptrend back, resume uptrend, back into uptrend here, confirmed uptrend. It got out here and got right back in, just about the same place, just a little bit lower. Okay, it did set out all of this, and there is value in sitting out this. You know, this is scary. Down here, people are selling, and taking their lumps. So there is some value into avoiding a big drawdown like that, but for the most part, this has been terrible, and they're telling us all to get back in here. Okay, now the crystal bull timing models here, the trading indicator is currently out. All right, it took these opportunities here to sell. The last oversold condition was here. Another oversold condition was here. The model exited here at the top. The model picked up these as buy zones, oversold, exit. It exited here. It picked these dips as oversold conditions to enter. Here was an exit and here was an exit. Okay, the model got out here in September, right? And it was in this dip and got in on this dip and so forth. But for right now, the model took these opportunities to exit after getting in either here or here. Okay, so that's not good. You know, the trading indicator is showing that this market may be overheated relatively here in the short term. We'll go to the macroeconomic indicator, and you can see that the macroeconomics are still going strong here. You know, the yield curve is getting closer to flat or inverted, but there's other things that come into play with this macroeconomic indicator. You know, it's been pretty good at coming down and foretelling some recessions, but right now it's not seeing necessarily a recession on the horizon. But with this current tariff plan, anything's possible. But it is taking a little dip here. It is weakening, but so far this is still room to grow. That's a positive. And the crystal ball trend indicator has exited the market. So the current indicator, the trend indicator and the trading indicators are both out right now. The trend indicator exited here for the duration of that recession. It exited here on this dip. It exited here on this dip. It got out on these dips. Of course, it got back in and then it exited here. So the trend indicator is also out. So this is not a time for going all into this market. You have to trade with caution, but we still picked up 10 stocks to look at that a person might just want to keep watching. This does not mean run out and buy these stocks. It just means pay attention. If the bull market resumes, there are some that may be poised like a loaded spring to resume their uptrends. But for now, a lot of caution is warranted, regardless of what IBD is telling you here is uptrend resume. Okay, there's we've had this is really can be considered 4 legs down. 1, 2, 3, 4. You could consider as 1, 2, 3, but still we've had either 3 or 4 legs down, and usually that's getting closer to the bottom. But here we are. Anyway, IBD's back in the market. Crystal Bull is a little skittish right now. Anyway, caution is warranted. So let's go start with the trade desk. Now this is typical here. This is not a viable pattern per se. You know, you had a really nice run up and it put in a cup with handle and it just almost broke out and then failed. So this is still in a basing situation here. This does not mean run out and buy this thing. This is still basing. Normally this would not make a watch list. It really doesn't make this watch list. What I wanted to show you here was that the 10-day and the 21-day exponential moving averages are low and trending down, as is the 50-day. But if this does resume and start to rise out of here over the next few days, you may see the 10 and the 21-day meet the 50-day. And that would become a nice support level. As it rose above that, you could use that as an early exit if it were to fail again. For right now, we're just watching this. So on the watch list, you have 86% earnings growth, 50% sales growth, 2 stock checkup flaws, 99 composite rating, very little debt. You know, this is an interesting play, but it's not viable right now. We've got an alarm to go off if it happens to get above this sloping trend line, but for now we're just hoping that we have a nice setup here going forward over the next 4, 5, 6, 10 days. We can get here and bounce above a convergence of these moving averages and stay there. The RS line has held up pretty well during this downtrend. Okay, that's one thing we like to see here. Maybe a winding of a spring. TWLO. TWLO had a cup with handle that failed. It failed more than once. It really didn't break out. This was a high handle, but it did break out again and failed again. So this is all still basing. This is just too sloppy to be a new base. And one thing I wanted to say is that IBD says that a bear market resets all bases. Okay, so when you're going here in MarketSmith and you see in the bases here, this is saying this is a second stage cup here, but IBD is saying all bases are reset. So if you had a new base forming here, there would be a first stage base. But this is right back and almost kissed the buy zone from this original base. This is a kind of a faulty entry here because it's failed twice, but this, look at the RS line. It's held up well. It's been rising. You've got great earnings and sales numbers, 6.5 stock checkup flaws. But this is one that could do well if the bull market resumes. So we want to pay attention to it. We've got an alarm set to go off here if this rises. But still, you don't have a base. You've got a declining 10-day, a little bit of a decline in the 21-day. But this thing could be one that does well going forward if the bull market resumes. Not a viable base though. VEEV. Okay, this is like TTD, way down in the base. You know, you had a double bottom, it failed. Now you're just at the bottom of a base. But look at your support here. It bounced off or went through the 200-day and then bounced back. But the 10-day and the 21-day are starting to rise. The 50-day should start to rise here. But it had a pretty good day on Friday. The whole market had a terrific day on Friday, and you're going to look through these, and these growth stocks that I'm looking at didn't do that well. This is another troubling sign. You know, usually the leaders lead. The leaders did not lead this one. You know, this is a nice up day. You know, it's up 7% on high volume, but it's not a pocket pivot. It didn't rise higher than this day here. So that's a little bit troubling, and you've got to, so it's still deep in the base, it's still basing. But we've got an alarm set to go off if it crosses there to pay attention to this. If the bull market resumes, if you have news of the China resolution, and you know, we did have news that the Fed was going to maybe be a little bit more hawkish or a dovish here, where we could have a less likely to raise rates. All that's positive. So this could turn around, form a nice base, and start to rise. We want to have an alarm set to go off if it has a viable pattern, which it does not yet. And see, Marcus Smith is showing this as a 4-stage base, but again, it's first stage. Actually, this should be first stage anyway because the double bottom, this is a valid double bottom and a valid entry here that failed. No, it didn't. It didn't undercut this. I thought it looks like it did, but it didn't. Okay, so it is still basing, but it's first stage base nonetheless. 1 stock checkup flaw, 99 composite rating. CYBR. Okay, similar thing. You had a double bottom and it's failing, but look at your convergence of these trend lines here. A couple of days here. Now again, we had an unbelievable day on Friday and this thing lost money, okay, on higher than previous volume. Terrible. That's a terrible sign. You can't run out and buy this, but we do have a first stage base and a double bottom, and if it started to break past this trend line, we'll take a look at it. It should hold above your moving averages here, but that is not a good sign, having a big down day on a market when the market goes up big. Again, the leaders have not been leading. Atlassian team had a cup with handle, broke out and pulled back, didn't quite get to -7 or 8%, but pretty close. Had a decent up day, up 3%. It's above your 10 and 21 day. We've got an alarm set to go off if it breaks the standard buy point here. Okay, 2.5 stock checkup flaws. AYX, Alteryx, sloppy base. Again, they're showing this as a 3rd stage base, but IBD says we can reset our base count, so be careful with that. Don't rule everything out just because you've had previous bases. But this is sloppy, ugly. We've got an alarm set to go off if it starts to rise, but you do have convergence of the lines here, some support. You got great earnings, 5.5 stock checkup flaws. Can't run out and buy it, but it is a new base, and it could break out past this sloping trend line. Planet Fitness, still own Planet Fitness. Planet Fitness has done very well through this pullback. Look at the RS line. Okay, that's a winding spring. The price hasn't moved, but the market's gone down. So if we get a general market push here, you could see an inflow into Planet Fitness. Okay, let's take a look at the fund ownership. Fund ownership has been increasing nicely. Okay, so anyway, this thing could be popping here. It's right at above the buy point from this previous cup. It put in a whole new base here. This was a could be considered a cup with high handle, but I believe that handle's too low. Anyway, this thing could be viable here. You had a nice day up 4%. Don't have a pocket pivot, but you do have great earnings. They're growing sales in stores, and it is something to look at here. If you can squint really hard and ignore this chop, you can see that this thing has been holding up nicely. Ring Central, similar pattern. This is a couple of low handle, another low handle that failed. This handle is too low. This is in the bottom half of the cup. But still, we're gonna take a look at this. You've got a convergence of all 4 trend lines here. Okay, you've got tremendous support here at about 78 or so. Okay, so you don't have to wait for this thing to go crashing if it fails. You've got terrific support. The RS line has been okay. We've got a sloping trend line to go here if it were to break out. But in this for some people's trades, this would be viable here as a bounce off of all 4 trend lines. But again, with the market up strongly, this thing really didn't lead. Not convinced. Quinn Street, you do have a full base here, and you've got some convergence of the trend lines again. The 200's way down here, but the others are here. So this thing could do well. Had a decent day on up volume, great earnings and sales numbers. Okay, $15 million daily liquidity, which is fine. Tencent. Okay, a little different story here. Now first, the IPO price on this was $13. Okay, so it spent a whole bunch of its life below the IPO price. Not good. So one of the things you want in an IPO is to show continued strength. But China's been doing pretty poorly, especially with all this tariff stuff. So this thing hasn't done well. But this is a big company and a music play, which China has 1.5 billion people. So this could have tremendous growth potential. You've already had decent earnings and sales growth here. For the past couple of years, 8 quarters have gone from $288 million to $722 million in sales. That's very strong. The IPO price was 13, and you can buy this pretty much just above the IPO price here. All right, you know where to sell it. This is more than a 7%, but not much more. Right here at the $12 range. A person could buy this. The volume that's not very good volume. It's pretty bad volume in this scheme of things, but it is an up day. It rose to the top. You wouldn't want to put your whole house into this thing, but it is viable just at the IPO price or above, and you do have a pretty clear support there at about $12 where you could sell it if it were to fail. Okay, that's all we have. It's not there's no diamonds in here. You have a lot of coal, but we're watching them to see if they turn into diamonds over the next week or longer. You should be mostly in cash right now. Should have been stopped out of most of your trades or just gone out because the market's been poor. Hopefully you haven't been sitting through this terrible time. A lot of people have. A lot of people have lost a lot of money here. But that's what we got. Just keep an eye on them. And remember, nothing in this presentation was to buy or sell anything. You trade at your own risk. I am not your investment advisor. And thanks for watching.